How do I get started? What do I invest in first? How do I invest my first $10,000? After starting this YouTube channel and blog a few months ago, this is by far the most common question that we get. What's up guys, my name's Adrian and welcome to my channel on passive income investing. In today's video, I will try to answer those questions and help you build your first stock portfolio. So the honest answer to those questions many new investors have is, it depends. It depends on your age, it depends on your situation, your character, and most importantly, your investment goals. So the question you should be really asking yourself is, why am I investing those $10,000 or whatever the amount is? Are you in your 60s about to retire and want to invest it to earn some passive income to supplement your government or your work pensions? Are you middle-aged and making a great income already, so your main goal is to grow your money as much as possible over the next 20 to 30 years? Or are you a pure passive income investor and just want to maximize the passive income you get every single month? It's important that you, the investor, figures that out before you start investing. Luckily, there are a few common investor profiles that can help you figure out just that. And I'm not talking about those lame ones that you hear financial advisors at banks come up with, like low risk, medium to high risk, etc., etc. I'm talking about something us humans and not robots could relate to. So I came up with 5 profiles and built a $10,000 portfolio for each specific profile, which we will go over in detail in this video. So keep in mind that this is not an exact science, guys. These are samples which should be used to give you a good idea, depending on your situation and goals, on how to invest your first $10,000 or whatever else amount you're working with. So also remember that I'm exclusively using ETFs in the example since they are very popular right now, and in my opinion one of the best options for new investors to get started, because it takes away the need to pick and choose individual stocks. So let's get started. Let's go over profile number 1. Just a quick note, I apologize if you can't see it clearly, if it's too small. Keep in mind you could download the sheet by clicking on the link in the video description if it's easier for you to follow along that way. So the first profile is what I like to call the Tortoise, or simply the balanced income investor profile. So this profile focuses on income, diversification, and stability, equal parts for these 3. I would say it's a moderate income. You are willing to sacrifice a little bit of income to lower your risk, to not have exposure to volatile specific sectors like energy, for example. Also, I gave you added exposure to defensive sectors, which are safer sectors, hence the tortoise, the big shell. Sectors like utilities and real estate, and when I say real estate, especially residential and industrial real estate, which is safer than retail and commercial. So this increases stability overall. So you're investing primarily in ETFs that use the covered call strategy. This boosts income and lowers volatility. So this profile is really designed for investors who want stable and consistent income while having full diversification as well. So looking at the ETFs, the first 5 are really my favorite regional ETFs that have mixed sectors in them. So the first 4 are from BMO, the classic ones, the ZWC, the ZWS, E, and G. So the C covers Canada, the ZWS is the US, the ZWE covers Europe, and the ZWG is kind of a mix, covers the whole globe. It is a bit heavier on the US side because that's just where the better dividend companies are. And HEJ is actually non-North America, so it focuses on international stocks, a really, really good one from Horizons. So the first 5 are all mixed sectors, are really region-based, so very broad-based, which is good for if you're looking for diversification like this profile is looking for. In terms of the next 4, they are sector specific, so they're defensive sectors like I mentioned here at the top. So the ZWU and HUTL cover the utilities, which is a very safe and defensive sector. So ZW covers utilities and telecom in North America. HUTL from Harvest is more global. but they're both utilities. In terms of real estate, the second defensive sector, you have HGR, which focuses on global real estate, and IDR, which focuses on global as well, but is more North American focused. So you have really good extra exposure to defensive sectors, utilities, and real estate. And of course, you're always going to make sure to have some gold in your portfolio. So CG XF is one of my favorite gold ETFs. It uses covered calls, so the yield is pretty good, and it focuses on really the big global gold producers. So you're looking at, for this profile, an average dividend yield of about 7.42%, which is really, really good. So investing $10,000 would give you about $742 a year, which translates to about $62 a month, so pretty good. The timid cat, or the conservative investor profile, really focuses on safety, stability, and capital preservation. The income is modest because you're sacrificing some income for more safety and stability. So in terms of added exposure, you're going to have added exposure to safer fixed income type of vehicles here, like preferred shares and corporate bonds. Those are considered safer fixed income securities versus stocks, which are considered equity. So we're limiting sector-specific exposure only to telecom and utilities, which are really the safest and a very defensive sector. So this profile is really designed for skeptical first-time investors who have a really hard time tolerating volatility. So looking at the ETFs, the first two will have your Canadian and US exposure, except opposed to ZWC and ZWS, it's ZPR and ZHP, because we are getting preferred shares only. So preferred shares are considered fixed income. They're a lot safer than the common shares. So that's why you have here 20% or $2,000 in your Canadian preferred shared ETF, and the same thing in the US. So after that, we're giving you exposure to Europe and global as well, because we need to have some international or non-North American exposure in there. In terms of sector-specific exposure, you're only getting it with utilities and telecom, which is the safest or the most defensive sector. Everyone needs their utilities, their power, and their voice and data services, right? So that's why it's considered defensive. So the ZWU ETF from BMO easily takes care of that. Then you have the ZHY, which is US corporate bonds. So corporate bonds is considered fixed income as well, a lot safer than equity. So I put it in there. Then you have the ZMI ETF, very good ETF, very interesting ETF from BMO. It's basically a mix of a bunch of ETFs from BMO. So this is actually 57% stocks, I would say safe stocks, big cap of course, and 43% bonds. So it's a really nice mix of stocks and bonds, really designed for safer investing here. And then you have HGY, which gives you exposure to gold itself. So I'm not giving you exposure to gold producers, I'm giving you exposure to gold itself, which is safer. So the Horizons HGY ETF takes care of just that. So you're gonna have an annual dividend yield of 6.27%. is pretty good, a little bit less than the other one, but we're sacrificing some yield for safety here. So it translates to about $52 a month, which is still pretty good. So the third profile is called the cash cow, or the pure income investor profile. This is definitely my favorite one because it describes me to a T. So this profile, we're focusing on maximizing passive income. It's high income. You're looking to achieve the maximum income while still being diversified. So you will have some added exposure to higher income sectors like energy, financials, and healthcare. This invests exclusively in ETFs that use a covered call strategy, because covered call ETFs simply boost the income. So this is really designed for investors who want high income while being able to tolerate some volatility in the market. So looking at the ETFs, you have your baseline ETF still here. So you have ZWC, S, and E, which cover Canada, US, and Europe. You also have HEJ to get that international exposure. I did put ZWU, which is utilities and telecom. You still want some exposure to defensive sector here, and it's a really good income actually. It's at 7.99%. So the specific exposure to increase your income is going to be, I chose ZWK, which is exposure to US banks. It's a covered call, a really good covered call ETF from BMO that focuses on US banks, really high yield right now, almost 10%. Of course, you have the energy, HPF from Harvest is just giving a massive yield right now because of the damage the oil industry took because of COVID-19. So that one's at 14, almost 15% yield. Then you have the HHL ETF from Harvest, which focuses on healthcare, a pretty high yield there too of 9.32%. And I added some technology in there because you still want to have a little bit of growth potential, and technology has been doing really well lately. So the TXF ETF is, in my opinion, the best ETF for technology in terms of income and growth, because you're getting really good income with those covered calls. So your average dividend yield is 9.24%, pretty high. So you're making about $77 a month with a $10,000 investment with this profile. Profile number 4 is what I like to call the Beaver, or the growth-oriented investor. So this profile focuses on capital appreciation for the long term. So the income is moderate. You're willing to sacrifice some income now for growth later. That's basically the premise here. So you do have exposure to passive index ETFs, which capture the overall growth of the stock market. You also have added exposure to growth-oriented sectors like technology, and a very new one, cannabis, right now. So this is designed really for investors who are not really concerned with income right now, but want to maximize their growth for the long term. So looking at the ETFs now, the first 5 are basically your baseline taken from the balanced investor one. So you have the ZWC, SEG, and the HEJ. But where it's different now is that you're going to have some exposure to the S&P TSX capped composite index ETF, ZCN from BMO, and also the BMO S&P 500 index. So this gives you overall exposure to the stock market in Canada, and overall exposure to the stock market in the US. So the passive income type index ETFs are really known to provide growth because they follow the stock market. So if the stock market really grows significantly in the next 20 to 30 years, that's where that capital appreciation is going to come from. You also have some exposure to HCN, or Chinese dividend stocks. It's a very fast growing economy, so I added China in there, as well as specific sectors that are considered growth potential sectors. Technology and cannabis is in there. So the average dividend yield is 7.11%, which gives you a monthly income of just under $60 with an investment of $10,000, which is pretty good. So the 5th and final profile I want to cover is called the Albatross, or the international oriented investor. So like the name says, it's pretty obvious. It focuses on international stocks. It has moderate income. So you have added exposure here to foreign stocks, so non-North American, and you also have some added exposure to defensive sectors like utilities and real estate. This increases stability. So this is really designed for investors who are looking to invest heavily in international stocks. The reasons could be numerous. Maybe you have a big pension plan with work already that focuses all on North American stocks. Whatever it is, this profile is really for someone who wants to invest in international stocks. Right, so looking at the ETFs, you see that you only have a very small percentage of coverage or exposure in Canada and the US, so only $500 each year. The bulk of your investment is going to be in this one here, ZWE, which covers European dividend stocks, ZWG, which is global dividend stocks, and of course HEJ, which is complete or 100% international stocks, or non-North American. So 60% of your investments make up these 3 funds. I also gave you exposure to Chinese stocks, of course, HCN, And the only sector specific exposure you have is real estate and utilities, which is defensive. And I chose the HGR and HUTL ones from Harvest because they focus a little bit more on international opposed to North America. So this one, this profile, you're getting an average dividend yield of 7.21, which translates to about $60 a month. Really good for investors looking to tap into those foreign stocks. So there you have it, guys. I hope you enjoyed the sample portfolios and have a good idea which profile matches your personality and investment goals. Keep in mind, nothing is set in stone. You could always pick and choose your ETFs and build your own custom portfolio that best suits your needs. So like Morpheus tells Neo in the Matrix, I can only show you the door. You're the one that's gonna have to walk through it. So it's important to actually get started, guys. That's the most important thing here. Once you start investing, you will eventually learn how your ETFs work and understand them better. And after that, it becomes easier and easier to decide what to invest in next and continue building your portfolio. So thanks for watching, guys. I really appreciate it. Please hit the like button if you enjoyed it. Don't forget that you could download the sample portfolios for free. Just check out the video description below to get it. Also, make sure to check out my other recent videos on ETFs where I explain what ETFs are and the types of ETFs out there, as well as a list of my favorite ETFs on the TSX right now, many of which were mentioned in the sample portfolios. So take care, guys, and see you next time.